Welcome in, folks. Couple things I want to react to here. Stanley Druckenmiller, legendary investor, loaded the boat on Palantir stock. So I want to react to that, give my opinions and perspectives on that. And then I want to react to this video from yesterday. Jamie Dimon, speaking of arguably the most important man in finance, speaking about inflation, the markets, where he expects things to go from here. Obviously, the CEO of JP Morgan Chase, the most well-run and honestly, the top financial institution in the world. So we'll get into all that. Appreciate y'all joining me. All I need from you, smash a like on this video and hit the subscribe button. It takes less than 5 seconds to do it. I appreciate y'all, and I spend a lot more than 5 seconds doing these videos for you guys, okay? And by the way, free new workshop for you guys, 7 steps to 7 figures plus in stocks. That is pinned comment down there. Absolutely free to access that here today, okay? So right off the bat here, Stanley Druckenmiller is one of the best hedge fund managers of all time. He's got a net worth of $6 billion plus. That means when he buys something, people listen. And in the latest, 13F here, essentially, it is found that he ended up buying about 769,000 shares of Palantir stock. And this is after he sold out of his entire position of 700,000 shares in Q2 2023, right? Now, if we want to look, it's very interesting because essentially, if you look back to that particular time frame when he was selling out last year, basically Palantir stock was between about $18 and about $16 during that particular time frame, okay? So he's now, recently, if he bought it last quarter, which it was, right, he basically paid 20-something dollars likely for the shares, right? Versus when he sold, it was somewhere between $8 and $16, okay? So there's a few things I would glean from this, essentially. First is, clearly, some things had to fundamentally change with Palantir for the much better that makes him say, I might have sold Palantir shares at 12, 14, 16, 8, whatever, but I'm willing to pay $20 plus for it today, right? The company's had to have gotten much more valuable. If it was a situation where he sold at $15 and today Palantir stock was $8, you say, okay, he just thinks it's a cheap price right now. It's a good value, right? This is like, to be paying a lot more than what you sold at last year, you've got to feel like the business model, the fundamentals of the company are exponentially better than they were, okay? Second thing, and this is very important for everybody to understand this, okay? When it comes to all these legendary super investors, they make mistakes. They make mistakes. They sometimes sell stocks at very bad prices. They sometimes buy stocks they shouldn't buy. Sometimes they sell for losses, okay? You can be the best in the world at this, and you're still going to make mistakes. Stanley's made countless mistakes over his career. Warren Buffett has, everybody you ever look up to in the investing world. And you got to have a bit of maturity in this game to understand people make mistakes. That does not mean they lose all credibility or something like that, right? And it happens, right? And Stanley's, he made a mistake selling NVIDIA recently, just to be quite frank. He sold those shares likely between 400 and 900. Today, the stock is, significantly above that, obviously, right? And so, if I look at myself, public account, we have trounced, absolutely destroyed the S&P 500 in the public account over the past 5 years, right? It's not even close. It's not even close between my performance and S&P 500. Guess what? I've also made plenty of mistakes the past 5 years. That's what happens. But as the name of the game is, are you still killing it, right? That's all that matters in the end, right? And so people sometimes put too much faith or too much disrespect when it comes to these legendary investors, where they look at these legendary investors and they think they're perfect and every move they make is the right move and you got to follow them. Absolutely not. They screw up all the time. And at the end of the day, there's other people that look at them and they try to say they don't have any credibility, and it's like, yes, they do. They're still phenomenal at this game. Every athlete loses a game, and I think ultimately it comes down to people that don't really know that much about the market, or people that they never really did anything competitive in life, and they really haven't achieved anything, so they don't understand, you take losses in life. There's no such thing as a perfect record. You can ask any one of these legendary investors, and they'll tell you they have so many mistakes they made over the years, and at the end of the day, they still became billionaires. They still became, more money than they ever know what to do with, right? So just a little food for thought in regards to that situation, okay? All right, let's get into Jamie Dimon here, and I'll react to this and kind of share my opinions and perspectives here.
And Chief Executive, thank you so much for hosting us again at your global market conference. What's market turbulence looking like right now? So we have the CPI print yesterday, markets rally. Are they getting ahead of themselves?
Yeah. So I wouldn't call it turbulence. We've had good, healthy markets for quite a while. They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. It doesn't tell you what the future is going to be. And I can point a lot of times in history where that was true, and the next year wasn't true.
Fair.
And so, we'll see. I don't pay as much attention to monthly numbers as most people do.
I know. So what do you think the future is for inflation and interest rates?
I'm a little more worried about it. I mean, we've had very big fiscal deficits. And, I think the underlying inflation may not go away the way people expect it to. And I look at the future, like a lot of things we look at are kind of inflationary. The green economy, the remilitarization of the world, the infrastructure requirements, the restructuring of trade, fiscal deficits. So I think there are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect. So the surprise would be rates are higher, inflation a little bit higher, and maybe that'll slow growth. And obviously, geopolitics is a whole different issue.
Yeah,
that could be determinative in what our economy does next year, and we're just not going to know.
But so does that mean you?
Boom. And remember what I told you guys on the main channel video, if you don't follow me on their financial education, right? What did I tell you guys a couple nights ago, right? I told you, this is why, even if you feel like the coast is clear and the next 6 months will be good, 12 months will be good, you got to stay away from even margin out money, call options, things like that. Jamie Dimon just explained it, right? You can have some black swan event happen and it can just completely decimate the market in the short term. And all of a sudden, all your call options go, all your margin, next thing you know, you got margin calls on your portfolio and you're totally screwed because something transpired, something happened that you didn't see coming and no one saw it coming, right? And this is what happens. And so that's a little food for thought in regards to that subject. Very, very important.
50-50 whether the Fed cuts or hikes next time around, the next move.
I really don't pay that much attention to that. The Fed will have to follow the data, and I don't know what the data is going to say, but I think they are doing the right thing to be patient right now. See what's going to happen. They may not know for a couple of months.
But no big correction. I mean, if you don't pay that much attention to it, it means you're not worried.
Yeah, he doesn't pay that much attention to it. Why? Because he knows whenever the Fed does finally start lowering, they're likely going to lower by like a quarter point. And is that going to do anything? No. It doesn't even affect anything, just to be quite frank.
No, I'm worried. I just said stocks are very high, and I think the chance of inflation staying high or rates going up are higher than other people think. So I think the chance, my view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
In the U.S. or globally?
Well, I'd say in the U.S., but also that could affect globally. Yeah.
Oh. And so what does that mean for markets?
They'd be down. And credit spreads would gap out.
So why is the market not pricing that in?
A lot of happy talk.
Where does that happy talk come from?
Low rates, central banks are going to reduce rates. Maybe the geopolitical things disseminate, don't cause problems. And so, the future isn't predictable like that. So, I'm a student of history. I've watched all the inflection points. If you go back, my dad was a stockbroker. I go back to the booming markets of 72 and the collapse of 74. The healthy markets of 80, the collapse of 82. The 87 market crashed, the 1990 real estate crash, and almost all of them were not predicted the year before. So I look at these factors that drive these things. They're not always known. As a company, we prepare for all of this. We can serve all our clients regardless.
But what do you see as...
So what do you just explain there is very important, right? One is, the risk to everything is higher than people assume. And I can't disagree with that. I think he's probably right on in regards to that, right? But I think the second point that's even bigger in regards to the situation, what you can take from this as an individual retail investor, right? Us mom and pop investors, what can we take from that? I think what we can take from that is you don't know what's going to happen with the market. You don't know what's going to happen with the economy, right? And you also don't know about black swan events and, anything geopolitical that could come out of nowhere that no one expected, right? So therefore, you can't make your investment decisions based upon thinking that you know what's going to happen with the market or the economy. Oh, I think the market's going to go down next month. Oh, next year or this year or that. No. You focus on long term. Buy great companies that have great 5-10-year futures in front of them and do that. That's what I do. Do I think there's risk in the market? Sure. Do I hedge my portfolios a little bit? Sure. Am I ready to buy if there's any major dips in the market? Yes. Do I buy every single week? Yes. And so it's a good balance of all those things, right? But people lose out on way more money by trying to think They know exactly when the market's going to crash and they're going to be able to buy stocks than what they could make if they just stayed invested, right? Even look at Stanley. Would he have been better off just owning Palantir and not trying to trade out of it last year? Yes. He would have been far better if he just held the dang stock instead of trying to time in and out. And then he buys it back and, what. At the end of the day, folks, stay focused on the long term in this game. We can pay attention to this. We can keep an eye on things, right? But to make your investment decisions based upon you thinking you know where the market's headed in the short term, it's foolery. That's what it is.
Stress right now, because if it's geopolitics, we talk about it. It's just not really priced in. Is it distress? Is it something actually going under that you worry about, or just multiple factors coming in at the same time?
Hey, if you like Thai tea, let me know in the comment section if you like Thai tea. I bet you most people watching this video, you never even had a Thai tea, but it's actually relatively popular here in Vegas. But yeah, let me know if you like Thai tea.
Well, geopolitics could create the main stress that we're worried about in terms of oil and gas prices, trade, alliances. But I think the surprise would be higher rates because inflation didn't go down. That inflation's been stubborn, maybe bounces up next year. I think inflation next year may be in the cards. It may have nothing to do with what you're seeing today. So that to me is the surprise. If you had higher rates and God forbid stagflation, you'll see stress in real estate and leveraged companies and some private credit and things like that.
So is unpredictability the new normal?
I think it's been the norm.
Let's be very clear. Stagflation is the worst case scenario. A lot of people think a recession's worst case scenario and unemployment going up a lot while, potentially having deflation. No, that's not. My opinion is stagflation's worse. If we have to still deal with inflation that's well above the 2% target that the Fed's at, let's say it continues to be threes, while you have unemployment going up significantly, then you're in a stagflation cycle. That's worst case scenario. It'd be much better to face actually kind of like even though great financial crisis was extreme, it's actually better to face that than a stagflation cycle, because stagflation cycles can sometimes last years, and it is brutal in terms of that. Great financial crisis kind of more of a, straight down, and then kind of, things got a lot better really quickly because then the Fed was able to drop rates down to zero. Obviously, quantitative easing came in the market, right? But if you are still dealing with inflation, it's hard to drop rates to zero, and it's hard to do quantitative easing if you still have an inflation problem, even if unemployment's starting to go up significantly, right? So that's an important thing to just kind of understand on the, economics 101, I guess you can say, in regards to that.
Life.
Has it?
Yes.
Not worse now?
No.
Wait, what
happens with...
So and God forbid stagflation, you'll see stress in real estate and leveraged companies and some private credit and things like that.
So is unpredictability the new normal?
I think it's been the norm my whole life.
Has it?
Good point.
Yes. Not worse now?
No.
What happens between...
100%. He's right on. He's right on in regards to that. Like, it's been the same game for the last 100 years in the stock market and the financial market. More than that, actually. It's going to be the same game the next 100 years. There's always going to be things to worry about. Oh, there's this, there's that, there's this, there's that.
In the U.S. And what does that mean for your appetite of being China?
Yeah. So the geopolitical situation is very tense because of Ukraine and Russia, Iran, the terrorist activities in Israel, North Korea, nuclear blackmail. We've never had nuclear blackmail before, and this is, of course, affecting our relationship with China. And, it's going to be hard to have a great relationship with China as the Ukraine war is on. We're kind of on different sides of that. And put Taiwan aside. Having said that, I think it's the right thing for America to fully and deeply engage with China, competitively. Every nation is going to do what's in their own interest for national security. So should America. We should define that fairly and properly. If there's unfair trade, negotiate that or do whatever you need to do. But the engagement is the right thing to do. China is not a natural enemy of the United States. They have a lot of their own problems. So, to me, we could work together as best we can. And then we have common interests: climate, anti-nuclear proliferation, anti-terrorism.
But what does it mean for a bank working in China, actually, given all of this volatility?
They're cautious. I mean, China, if you look at China from a risk-reward basis, it used to be very good. It's not so good anymore because all these things can go wrong. And remember, we bank, I've got the number, but 1,500 multinationals in China. They're not leaving China, so we're going to serve our clients there. We're just much more cognizant that the risk is higher. And I might put Hong Kong in that bucket too. We kind of look at China, Hong Kong as one at this point from a risk standpoint.
What does the Trump administration mean for the U.S. economy?
I don't know. You know, they're...
Why? Because it's unpredictable, or because we're too soon to actually trying to figure out the policies that he would put in place?
So if you look at history, who was elected president may not necessarily affect the next year. That's kind of like we're a big tanker and that's going to happen. I think the much more important thing is what we do in the geopolitical situation. You know, I've always been quite clear that American leadership is provided to keep the world free and safe for democracy. And that means economic alliances, which includes trade, by the way. I think we should spend more time in trade. It means NATO. It means that Russia should not win in Ukraine, because if they do, I think it can tear asunder this Western world.
I know you've ruled out being Treasury Secretary.
Yeah.
Why? What would it take to get you into politics?
I don't think I'm suited for politics. I love my job, you know, and so I'm not sure I want to do something like that. And I can hopefully.
But even if you got the call, would it be hard to say no?
I don't know. Probably yes. I love my job, and I have no interest in leaving and doing anything else. So.
We're in France at a global markets conference. What are you expecting from Basel III? What will Jay Powell put in place in the new rule book?
I should mention, by the way, because President Macron has done an outstanding job here. Pro-business, got us to move our trading floors here. You know, he wants to grow his economy. There's much more innovation. We had a thing last night about innovation. So, look, Basel III, we've been quite clear. We thought it was excessive, not well thought through. I would love to know what the end game is. What are they trying to accomplish with private credit? What are they trying to accomplish with, like even the other day, 80% of mortgages left the system, and now the government is talking about having a bailout system for mortgage companies because they're no longer in a bank that has the ability to provide liquidity in tough markets.
Yeah, so Jamie Dimon not wanting to get involved in any of these positions, probably whether it be like Fed president or, you know, Treasury Secretary or things like that. I don't blame him, and not just from the perspective of obviously, you know, he makes an insane amount of money. You know, as JP Morgan CEO, why would you want to move away from that to make little money being a Treasury Secretary or Fed President or something like that? But at the end of the day, even if you look at those positions, trying to look at it from like an innocent perspective as like doing basically like charity work, right? You can't do it because even those positions get very political, and so that's the annoying part of that. And he knows that, he realizes that, right? It gets political. And if you don't make certain decisions that a certain party wants to make, you will be out, right? I mean, T-Man's already talked about if he gets back in office, Jay Powell's out of there, right? So now if you're Jerome Powell, you almost would rather have B-Man win this election, right? Because T-Man's, that's the thing. If you don't do whatever that person wants you to do, you're on the road, right? And same thing with if you're Treasury Secretary or something like that, you got to start playing the whole political game. You got to start BSing, you know, answers to try to make your guy or woman look good. It's a bunch of crap, man. And he knows that, and he realizes that, and that's why he doesn't even want to get involved with that. It's more than just the money. The money's part of it, I can guarantee that. But it's also just you're ending up playing a game of politics, and you know, the politics becomes even more important than how you're actually doing your job, and that's no bueno.
That would be the same thing in market making. So they're looking at it. You know, I trust Jay Powell to look at and analyze what they need to do, how they need to do it. The other thing, which I'm not sure Europeans know, I have no idea, and it may end up in a lawsuit or something like that. But the amazing thing to me is that America ended up the end game 30% more capital than a European bank in America, and I just. Why are we arguing about international standards and then we simply don't do them? And also, I think the regulation answers the question, what do you want? How do you want the system to work? Do you want it to private credit or public credit? Do you want mortgages out of the banks? Just dictate it. If that's the goal, just dictate it. If you don't want leverage lending in the bank, just dictate it. You know, and I think, you know, we are guardians of the financial system. You know, we bank 100 countries, and you know, we're on the ground in 60 countries. You know, we do great work for cities, schools, states, hospitals, solar, wind, climate, middle market companies. Is that what they don't want or they do want? You know, they want to make it more expensive.
But they know, or are they still trying to figure it out?
I think they've got to figure it out. I don't think it's quite clear from any analysis they did. You guys should read it and write about it. There was no detailed analysis about cost benefit, what they're trying to accomplish, what the outcome will be.
That's why we're asking you,
right,
Jamie. Talk to me about France. So you're positive.
Boom, right there. Proves it, right?
On the president, Emmanuel Macron also.
It's not about what's actually better or not better. It becomes a game of politics. Who can we paint in this picture or that picture?
I know that you were at the Choose France event on Monday. If he relaxed labor laws, would you hire more in this country?
He did relax labor laws.
But if he relaxed them more?
Possibly. we now have 1,000 people here. We have large trading floors here, which trade. I've got the number $5 or $6 or $7, $800 million a day. When you have 1,000 people, you tend to hire more technology, more, and that's been true for us since I've been at JP Morgan. Once you have a very competent group of people and you have hiring and capability and friends, you tend to do more things there. So my view is we will be doing more things here. And it was the tax law they put in place, the regulations they put in place, the labor flexibility they put in place. Those things do make a difference. And very importantly, they don't just lift up JP Morgan here. We pay a lot of taxes here, which help lift up all citizens. I don't think President Macron did that for JP Morgan. He did it because he knows his country needs to grow, bring in innovation, and that's how you build a better country.
So the chief executive of the largest wealth fund in the world says that actually America's doing much better because Americans are less lazy or work harder than the Europeans. I mean, is that fair? Is that regulation?
I hate total blanket statements like that. I know a lot of Europeans who work hard, but I think when you see the thing about work hours, I think it is somewhat true. Americans are hardworking. Anywhere you go around, Americans are hardworking, but I see that here too. I don't think, and the innovation people you meet, they're working just as hard as the innovation people in the United States.
So you also, in terms of headcount in the UK, I think it's at the highest that it's ever been, and you're also you're giving money to try and retrain. And you've recently met with possibly the next Prime Minister because he's so far advanced in the polls. What do you think?
Look, I like the fact that both the Conservative and the Labour governments are talking about pro-business, simpler regulations, getting more innovation in the country, becoming competitive, and we all have too much debt. Growth is the best antidote for everything. And so having a growth strategy is good for a country, and it's good for the lower income people. And this training stuff is maybe the most important, is get training, jobs. That first job is a first rung in a ladder, creates dignity, more household formation. And I think countries have to do more of that, because if they don't, you can have a tough time.
But do you think the UK economy will change under Labour?
I don't know yet, but I was happy with what they were talking about. We had Rachel Reeves come to our conference too, that they're all talking from the playbook. We need growth, simpler regulations, more capital formation, more capital investment, meaning property taxation, because that's the way to help our whole country and all our citizens. So that is what we should all be doing.
Jamie Dimon, we talk around, India all the time. Is this a decade for India?
Europe's really been an underachiever for a long time now, as a whole. Europe, certainly my entire financial life, which really started in 2008, right? I've always viewed Europe as an underachieving geography. And it's still like that to this day. So hopefully things get going, because, there's so many incredibly talented folks in Europe. And it just seems like the systems have not been set up the best, at least in my financial life. I can't speak to how things were 30, 40, 50, 60 years ago, but, there's so much potential there, and it just seems like it's always been kind of capped from my perspective.
And does it somehow counterbalance China for, world growth?
Yeah, look, I think India has done a very good job. And, when you look at India, yes, it should have a very bright future. I'm not saying as a counter to China, but a very bright future. And I think we should all be reaching out to India. They have to stay non-aligned.
Very bullish on India over this next 20, 30 years. Very bullish.
Kind of where they are in the world between Russia and China. But, they're a democracy. They're a natural friend of America and the Western world, and we should all be helping them. And they've made a lot of changes there. Infrastructure, transfer payments, 700 million people bank accounts that are going to be very good for that country.
So what does that mean for JP Morgan?
Well, we're not in the retail business there, but
will you be in the future?
We have 60,000 employees there. We got big campuses, high technology, and we're expanding our trading, our research, our investment banking. Yeah, we're there in a big time. Yeah.
Can you talk to me a little bit about JP Morgan and how, you've had a number of high-profile departures. How does that change, actually, the way you focus your business and how you run things going forward?
Not at all.
Nothing? Zero? If you were to buy anything, what would you buy?
Oh, that's different. Look, we can't buy banks. You do know that. So,
Well, you could buy your European bank. Could you?
I wouldn't even try. I think the American regulator would hate it. I think the regulators here would hate it. Yeah. Even if they said, go ahead and do it, I'd probably be in courts and things for a year and a half. Yeah. Huge distraction to my own company. I'd rather just say we want to add clients, in this country, and clients in that country will add bankers and technology and branches. It's just a better way for us to grow.
Okay, but if you could buy anything, I mean, not a bank.
I can't tell you.
But you're thinking of something?
Yeah, we always look at stuff,
What region?
We're not looking at any major acquisitions or anything like that.
Technology?
Right now,
is there
if you look at what we're doing, we're adding literally, and we have Investor Day next week, we're adding retail and wholesale branches. We're adding them in the United States. We're in almost all the major 100 cities there now. We're adding commercial banking all over Europe and Asia. We're adding technology around payments and even a blockchain called Aheqd to move data and maybe move money one day. We're constantly investing. We have 2,000 people in AI and machine learning, 400 use cases on the way to probably 800.
I know. So if I speak to you in 5 years, how much bigger and how much different will you be?
You'll probably be speaking to a fake diamond who's just answering questions.
What, an avatar?
An avatar, yeah.
Do you think about technology a lot?
Yes, all the time. Every meeting we have, this has been true my whole life, when we have any management meeting, your technology agenda is on the table. That includes AI, cloud, just more analytics. What are you doing to do things better, faster, quicker for clients? Digital, a huge amount of digital services, integrating them better, automating them better.
But that would change. I mean, that will change, I guess, the heart of banking. Does that mean that you'll see more winners and losers because of the technological advancements?
So technology has always changed. The heart of banking, moving money, holding money, advising money, raising, that won't change. And you have to do that according to rules, laws, regulations by country. What'll change is how you deliver it. So like right now, you go on your phone and you can move money and buy stocks. That wasn't true 20 years ago. So yes, everything you do will change because of technology, but you'll still have to move money, budget, raise money, make investments, etc. So the core won't change.
But will it change?
And regulations may change that too, obviously. So
in the U.S., so again, would a Trump presidency be more favorable to banks when it comes to regulation?
I don't know. I mean, I am unhappy with the amount of rules and regulations coming out today.
He is basically him saying yes, by the way. So there's 3 financial institutions I've ever owned. One's JP Morgan, the other's Goldman Sachs, and the other's SoFi. And if I think about what makes those 3 special, they're just very impossible to compete with. Goldman Sachs just has such a great brand for high net worth individuals, investment banking, trading, that they're just very difficult to compete with. JP Morgan, brutal to compete with. I wouldn't want to be Wells Fargo, Bank of America, or any of these other guys that have to compete on a daily basis for customers against JP Morgan. They are top tier. And then SoFi, because new age, and they're just doing such a great job of attracting the newer generation, right? From millennials to Gen Z, Gen Alpha, they'll be very attractive. And so I think it's very difficult to compete with any of those 3 companies. And that's what makes all 3 of those the only 3 that I've ever been interested in owning, right? And I can't see that changing anytime soon. All right, guys, appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed. Also, make sure you get that workshop, guys. That's going to be the pinned comment down there here today. I think about 500 people have gotten that workshop so far or so. Pin comment down there and send it over to your email. It goes through each step, growth hacks to scale faster, and how to implement those 7 steps. Okay, definitely enjoy that video. Much love and have a great day.